And I think we're back. I've just set the settings to low latency and closed captions, so everyone can participate on the stream. Thank you for coming. Basically, what I want to do here is to go about my process to find mirror version setups on altcoins. This is one of the one of the main pillars, let's say, of the way I personally trade. It's a type of range trading, if you want to see it that way. I think if you're a person that has maybe not as much time to be day trading every day, you might want to take a look at some form of easier, simpler trading, such as range trading, because the why it's easier. Well, the thing is, you get to trade with higher time frames in comparison to what is a scalp strategy, let's say. A scalp strategy, actual scalping can be trading from the 1 minute chart to the 15-minute chart. Some people also say that's not scalping. The actual scalping is like trading on the DOM itself, on the order book itself. I tried that. It's not my thing, to be honest. Not something I fancy as much because I don't know. It's sometimes, especially in this wiki market that we have, you have already enough volatility on the 1 minute chart, like to be concerned about. Look at this, like to be concerned about getting stopped on an order book by a tick. A tick is $10 of price movement for the most part on BTC, and $10 is really low. Isn't that something that? Unless you're an algo, I don't think you have much edge at trade that way. So. Anyway, I want to show you the whole process. Um, wait a second. Okay. I want to show you the whole process in terms of how I set up the context and I go about this looking at the higher time frames of any coin. I do the same on BTC, but I usually scalp BTC more because it's a more liquid asset and sort of it's sort of the asset you can actually get stopped at the market in a very liquid environment and not get hurt as bad. On our side, for the most part, if you get stopped at the market, it's quite hurtful. So, I'll show you with every coin. This is the setup. I just load Binance USDT markets, which is the biggest list I think of alts at the moment, and also the one that is less wiki. So the pivots are clearer, and then basically start marking the pivots of the coin. Um, let's do an example. Also, the Binance chart has something very useful, which is many altcoins were initially listed there, so you have a lot more price action to work with. If you compare the same altcoin with, let's say, Bybit, for instance, which is a newer exchange, you will have maybe price action from here to here, and you might be losing the side of some old price action that might be useful at some point to mark your levels. So in this case, this is also a lot of pattern recognition that based on experience that maybe I was on the market when this happened, so I sort of remember how this stop was formed, for instance, or when someone received when I received the 1 inch airdrop back in the day. There's a lot of old price action helps in this regard. So what's the point of all this? The point of setting the context for your trades is basically helping you not to be traded in the middle of nowhere. Like I tested this system. Sorry, I need to get lower the volume of this. Maybe I need a new side. Setting the context of your trades, as I was mentioning, uh, is what will help you not to get into a trade in the middle of nowhere. For instance, I can guarantee you this price action right here. this sort of I call them pivots because a pivotal area on the higher time frame. The first time, if ever we touch this area, it will reject hardly. So you can get a limit trace sort of set up here, and it's a high probability trade on the first occurrence, the one when they get touched. Maybe you've seen people like Rob like Woods from the group. He also uses a similar system, although the one I am going to show you right now, it has a few modifications just to make it easier for myself. Um, so basically, what you want to do, I have these two charts in parallel. Um, and I select this the magnet tool and this one the link tool, so it reflects on the other chart, and you start looking on the monthly chart, uh, and then the rate tool, of course. You start looking on the monthly chart for something like this sort of harsh rejections, because the logic behind that is that it's an area where the market actually found a bottom or a top. So you it's a sort of a way of defining a range. Um, I like to use this color for the monthly. I use different colors because I think it's a visual aid that can help you. You will notice it later when we go to the lower time frames to find an actual trigger for a trade. Lower time frame, I mean 4 hour time frame, or maybe 1 hour time frame. You don't need to think about what that level thing means. I'm watching this price action right here, and I can notice and say, okay, here is a monthly level, and I recognize it's a monthly level because of the color. Um, let's just do another example. On this same chart, we see another pivot here, another pivotal area here. So these are areas that most of the market, just by looking at the monthly chart, can tell you, okay, this is an area of relevance, let's just say. Um, and this is pure technical analysis in the sense that it's based on a price action chart and it's a visual aid that we want to use. So we can start saying that this is a lower time frame chart. Just by marking these two levels, we already have a sort of working range. And the lower bound hasn't been tested for the time being, but we'll go on lower time frames to see what other levels start to pop up. But for instance, just by marking the top of the closing of this previous month candle on this new month candle, um, we can see that we had a test of it, and then we went down. So it's helpful in that regard that you can actually, let's say, you were trying to get short at a certain level. What the first level you might have wanted to see is this around this area. Yes, of course it's weak because it's quite liquid. But it's not in the middle of nowhere. This is not a trade in itself. This is the context of the trade, and you'll see more clear in a moment. Here, we go to a weekly chart and we start looking for pretty much the same. And you see a pivotal area here that you might want to get to use. Yep, I see this one here. And for weekly areas with weekly pivots, I like to use the color orange. Again, for instance, if we now get on the 4 hour time frame, something like this, we start to get closer to this area. You can start thinking, okay, what's my game plan? Only based on context. This is not a trade yet. I know this area is important, is relevant. It's an area that held at some point, acted as resistance. When once flipped, acted as a resistance support. Touch another relevant area, went down. So here we can expect, due to the fact that it hasn't been touched as much, and if you pay attention here, it actually hasn't been touched at all. Everything it was formed. It was formed here. It wasn't touched. So it is to expect that this area gives some form of reaction. It's not a trade in itself yet, but you can start contextualizing how to place a trade here. And this is naked price action. We don't have any indicator yet on it. We're just trying to form a bias. The higher time frames are useful for that, are useful to create a bias or how to trade on a lower time. And of course, for context. Then the other pivotal area we see is here. So we have range, a bigger range. We have to work with here. It's not a range in the sense that maybe you've seen other traders utilize a perfectly lined up range, and here is the midpoint. Even though here is the midpoint to see how this midpoint is, in this case in particular, how this midpoint was created was by the use of a weekly pivot, as I was mentioning. And so basically we can start thinking on how higher time frame arrays will react. Then we go back again to daily chart and we look exactly for the same. Maybe we have a level here. Yes, and this level, the daily level, is blue. I like to use color blue. The idea of the colors is, as I mentioned, it's to help you not have to think the relevance of the level. I would put much more emphasis in a monthly level that I already recognize for the color on the first touch than on how much this daily level that might have already sort of been from here will react. So I will put more probability on this area giving some sort of a reaction, but this one, for instance, being a lot more relevant. Okay. And then I'm lately using. Well, we can have another level here. Yes, that will work. So again, for instance, if you're looking for shorts on the lower time frame, let's say 1 hour. If your bias is short, you can start considering, okay, I will not short right here because even though I don't know the structure tells me it's a downtrend of sorts, but this is the beauty of technical analysis. You can pretty much make up anything you want because this is a valid trend line, and should I short here? Of course, why not? This is a valid trend line. I should short here. Uh, it's subjective, you know. Um, that's the idea of this system of pivots as well. That you are basically defining where you want to trade with the market. It's not really a matter of this. This is correct. This is not correct. Everything's correct. It will be correct as long as you can uh, create a sort of let's say a sort of set of rules to interact with this trend lines. For instance, let's just say you go with the trend line example and you disregard. Should I share here? Maybe. Are you working on the 1 hour? Are you expecting this trend line to hold by any means? Is that your reasoning? Okay, it's not right nor wrong. How do you invalidate yourself? I mean, where are you wrong? You don't have the pivot right here. Where are you wrong? Um, so probably you put your stop right above here, and it might be the same conclusion I'm utilizing. However, I might want to not get involved here at the trend line, but I might want to get involved. Sorry, right here, and see if this holds, and if not, I play a reversion. So it's a different type of system. And we maybe have, thanks to that, um, a tighter stop. We do not need to utilize such a wide stop, and we got a more decent risk to reward ratio. Let's just say it's an example, of course, but is the main goal here is just that we see how different technical analysis, let's say, uh, strategies will sometimes be conflicted with each other. It's not a forceful obligation that everyone has to think the same. And that's why we test systems. I've tested this pivot system on altcoins and especially on Bitcoin. Although on altcoins it tends to be respected more, and it works pretty well. I mean, I can almost guarantee you we're gonna have a decent reaction from this. I'm not saying this will be extreme support or resistance, but if we manage to get here, we're gonna have for the most part a decent reaction here initially, and maybe it's a good short as well. The probability of success that we assign to trade it also has to do with other type of context. For instance, I would place more probability of success of this area uh, acting uh, as resistance again, and maybe this one because it's fresh, than this one, simply because of the market having to work a lot more to prove me that it actually wants to rip higher than here. Maybe here is just the chop, and it's a weekend. It's part of a context that is not really protecting anyone. It's more like how can I say this? Um, More like in the middle of nowhere. That's exactly what I wanted to say. So in order to not trade in the middle of nowhere, which is something that I often do a lot because I want to trade and I want to place trade so bad. This system of the pivots, I've tested it and it works pretty well. Of course, there are structures that are way more clear than others. In this coin, I particularly don't like it. I never liked the trade 1 inch. It was just the first on the list. I will do more. But the illiquidity that those books have, and especially on Binance, it seems, allows for this sort of stop hand with weeks. So we have, of course, a trend line, a downtrend, sorry. Uh, but hell, you see, it is very likely that maybe we get yet another one of these, and then a new lower low. So that helps you try not to trade. Think that is displeasing to look at the first time you check it. So finally, we get yet another pivot. This one is optional, let's just say, but we're looking for the same type of price action, and I like to make it light blue. It's for the 4 hour time. Um, Main idea here is that the the reason why pivots and in particular this reversal pivot work is that if price was moving so violently down, and this is one way to justify the use of it, other than the fact that I've seen them work. If we have such a extreme move down and then an immediate reversion on the next candle, you can call it that. It's not an engulfing candle, but this is a decent sized rejection. There's chances that people are trapped here. There has been this dilemma with the trap trader sense or strategy because you don't never really know how much people is trapped in there. But over and over again, we see that when we have this sort of formation, pivotal formation, the market tends to react and is in a way the reaction of people that was holding onto positions here, trying to exit at break-even, and is fueling the move up. Is this true? I mean, we should actually have to look at the order flow or something like that to see if it's actually true. Um, I'm debating that being true all the time, but I just know the pivotal areas work because maybe many people is looking at them. So it's a logical place to place. Orders is a logical place maybe as well to play stops for people that maybe what you imagine we're here. So people was long in this price action. Price comes back here, and you say, okay, we're gonna have an initial reaction or what? Maybe it also weaks you down and then moves higher. So that's why I consider, in particular with pivots, a very useful strategy is not to place limits exactly there, but to wait for the reaction, something like this, Then you long on the signs that these people is no longer being able to send price lower. So the counterparty simply enters and you get a fake. Um, we want to try to play something like this on other more decent charts. Let's just say. So basically, we got that. We've been able to go monthly from the monthly to the weekly to the daily charts, and we got our levels. We got our levels, and we if you watch the monthly chart, we just see nothing, very much nothing is actionable here. Uh, Weekly, maybe a bit more of actionable data, but still no daily. In case maybe a bit more actionable data. Maybe here we're starting to see. I like to use the line chart for this. Maybe here we're starting to see an uptrend that is completely failing to reverse to move higher, and we can start considering we're gonna have to place a trade that covers this inefficient move. Um, the topic of inefficient moves is also very interesting. Right? Is one of the main components of how I personally like to place trades because of this reason. When you see a gap, I'm sort of explaining everything at the same time, but I think it will make sense. When you see a gap like this, move like this, like pump, let's say here, this one as well. This means that not many people, the market for the most part, if you actually pay attention, is just chopping, like chopping in any way. Like it's very um, sporadical that we got the inefficient moves in any direction. But do you see a pattern here? And the pattern, for the most part, is every gap that we got on price tends to get filled. Not quickly at times, but the market doesn't really allow uh, price action to even here. Price action to like get not evenly distributed in terms of volume. It's like a key on a keyhole. This is maybe a terrible example, but I've always understand that aspect that way, and that's why I consider gaps are useful to place trades. You get a move, and in this move, many people were simply left out. I mean, they didn't trade here. They didn't trade as much, at least. Uh, so we can we can see this with the volume profile, for instance. We see that in comparison, we have these small gaps in volume. Let's just use it like this. We get this. Let's just see the anatomy of the pump. We have most of the volume around here because it's the areas of more consolidation. But in comparison to that, the initial pump was almost illiquid. I mean, there's not much volume here. It was just a lot of market buying, not a lot of limit selling, and the price simply move up. Is how all of these um, big moves that you see are formed. This is the anatomy of them. So the way we use that in our advantage, and this is in case, is we try to make a trade that has it easier to go through them. So, for instance, crossing all of this choppy price action must have been somewhat difficult on the first time. Why? Because we had a lot of volume built here. We had a lot of chop here. So even if the pump had it easier to move through here, and once it started to get into the area of chop, it had to work a lot more. You see, the consolidation started to get more. And then we had a blow of top basically, and market simply nuke. In this case, we're gonna try the same. We see this gap right here. Well, okay, this gap right here where price action has barely traded on, and we see more or less the same here. It indicates us that not many limit sellers will be not willing to engage with the market right here. So our job as traders will be to look for some actionable piece of price action on the lower time frames. Let's see here. And we see this gap. So a possible trade we can make just based on PA alone. And there we go. Well, we noticed these were our pivots, our pivotal relevant levels. And we say that this might act as support, this might act as support. What would be the case if price action simply no longer acts as support? If we get this, we belong here. But if we get this is the easiest and most probable sort that we're going to have in this case. And the reason is always the same. The reason is that if I'm a limit seller, I'm the counterpart that is supposed to be holding price for um, for you. I mean, I will be literally buying here. You're a seller and you have an intention of creating this downtrend. Uh, Not one seller, a lot of sellers. My job has to be rewarded in a certain way. And this is key when understanding price action and volume distribution. My job as a limit seller has mean something. I mean, why on earth I would let's just say buy here? What's my upside? Uh, my upside will be to have to work over all of this price action to get a potential pull. So one thing is to buy here and see strength and fade. One thing, and the completely different thing will be the case of I don't know, something like this, and the price action will have to do a lot of more of work to get something out of this uh, limit buys. So for the most part, you can assess when you see something like that, and this comes with time. I mean, it's just simply is the reason why we already seen this in a downtrend, and we consider this has more chances of going down. Is because you have seen it time and time again, and so it's sort of a second nature or pattern recognition sort of thinking that you already have and we already have, and we see this as a viable short. Is that easy? Well, it's not that easy, but the probability of this short working is higher than this long one because of all the work that the market, your counterpart, the people that make a market, literally speaking, have to do in order to get something out of their effort. So the market always tends to move towards the path of least resistance. And this is why I consider identifying places of very little resistance. I mean, you even see it here. This was a gap. We can make an effort and say, okay, here buyers had the chance to do a little bit more of effort and cover the gap, and they couldn't. So, which was the other gap that was covered? And this is super important. This gap right here, and we covered it very fast. So here was a short. In any case, what I wanted to say with all this is that there are a few principles that you might want to identify and apply to your trading, such as the contextual nature of where you want to trade to avoid having low probability trades. Um, then the other concept that I consider is important is trying to play an easy game. There's no need to play a game that where the market has to like show you like a lot of will to go in a certain way. That's why I consider if you want to try to interact with the market with the pivot system, um, okay, then you can look for fades in one direction, and you can also look for the breaks in the other direction. But you need the levels. I mean, if you hide all the levels, we're simply saying, okay, uh, how do I interact with the market here? You might want to create some imaginary levels, but the idea is that you more or less have something already on your chart. I try to do that every day. I try to wake up and go about the levels so I can I can sort of get a more clear picture of what I will be working. So well, okay, that was a lot of talk. That was pretty boring, I guess. So I think something that we can do is to check some more interesting chart than this one. So I saw someone saying something about XRP, so I'm gonna check that one. And as you see, I already had levels on XRP because it was sort of very popular come during this week. And let's see how it works. Let's see how we could have worked with the levels. And as you see, they sort of actually acting like important relevant levels. I think I didn't mark. Yeah, I marked them up. Um, let's take a look. XRP, I use the same system. It was a choppy mess for the past year or so, so it's not a coin I actually really like to trade. But scams tend to pump the hardest, so it was reasonable. We had the same here. I marked this level here. It was a monthly pivot, as you can see, and when the new candle moved past it, it was the first place where it found rejection. Look, notice how it's not necessary that it has to reject to the tick to that level, especially on a coin that was so hyped like XRP over the last week or so. Um, but I consider this was the most relevant level and not this one, because if it was going to pump, it was going to like look for the extreme. Same case if we're going to like automatically jump from here or whatever and start to create a downturn in XRP. This level is my bet 0.33. It's my bet that it's gonna be the level that reacts the hardest on the first touch. It's important that of the first touch is important. Weekly levels. Weekly levels. Look at this. It absolutely eat the weekly level. And maybe a consideration why it could have worked. It could have probably worked it on the first touch, but this is a level that is completely invalidated. If the XRP closes here or in any way above this level, the week, I'm going to simply delete this. I can even delete it now because it was a level that simply didn't work. It's a level that is not relevant. However, this is another weekly level, and it's a level that I'm probably going to be using if we start to trend lower. Why? Because it's a fresh level. When a level gets invalidated, when a pivot gets invalidated, the first thing I do is to delete it and create a new one. That's why I don't have that many lines. I only have like a few, but I think it works better for me. Maybe we got another level here. Yeah. Yeah, that will work. This must have been a mess to trade. Imagine we have like, so how much is that? 3 months of a steady downtrend. Not many nukes. I mean, we got those sort of candles with big wicks and whatever, but there's so much clearer setups to trade during this period than XRP. Although it was maybe, and this is a connotation to having it, maybe this was strength. I mean, in the middle of the brutal bear market and bad news every day and whatnot, it can help pretty well. Yeah, it can help pretty well. Gotta give it that. So in terms of daily levels, and as you can already see, look at it has some sort of respect for the system, but it's not working as well. So in this case, what do you say? The system is useless. Yes, the system is useless for this coin in particular. It's not something that you're gonna have much edge working on this. So, and this is a good example. I use this other tool, the Hull Switch, which is basically this. The people call it a ribbon. So it looks like a ribbon, I guess. Um, it's a tool to mark trends. I actually um, didn't long XRP because I really didn't want to hold this coin. But if you pay attention to the way the trend changed, you might have gotten a decent short entry here. More importantly, this fantastic long entry here. Let's go to 4 hour. I'm sure. Yeah. Look, it's even tricking this indicator as well. Yeah, this coin XRP honestly is something I've said it this week on chart ideas as well. You might not even want to have much edge uh, trading XRP based on TA. Um, might be a hit and miss type of coin. I personally don't trade it. I miss this, of course, but I personally don't trade XRP. I don't think. I don't think my tools have any edge on working with it. So so it's something I might not be interested in trading as much, to be honest. However, I think it did make sense in this case. I was watching this the other day when Bitcoin basically went crazy towards 28 the first time. That I think was the first, that day as well. I think this day as well. Um, Look at this on APT. I was short in APT because I considered it was something that had to go down, sort of. Uh, of course, the market doesn't have to do anything. The market will just trade, and it will trade according to the incentives that participants have to trade. You give a participant maximum potential, and this is, I think, important. Why when you take a look at why bull markets form and why bull markets tend to work, let's just call this a bull market. Let's just go all in and call this move on XRP a bull market, 2 day bull market, whatever. It's a parabolic move that came after a period of pretty much capitulation. I mean, if you interpret this data and even this data right here, yeah, it's the same. Uh, you see people literally giving up. I mean, like giving up on the coin. Um, I don't want to call every type of so prolonged losing of value of a coin manipulation. It's simply selling, and the auction will never go higher unless people have an incentive. For me, the incentive, mm, and why I considered it was a good trade. The incentive was this. For the most part, was the fact that we did have a huge sell-off. It's the same as here. What This is a good example as well. Why did we have an incentive to sell as hard here? Why? I mean, you could have said no. This was the real bull market, or the real whatever future of finance on XRP. Of course, but we also have like incentive to cover this gap. This incentive for sellers that say, okay, I will step in the market and I will market dump essentially all this um, all this volume, and I'm going to be rewarded because my maximum downside will be an invalidation around here, and my maximum um, upside in this case in the trade, not price action, will be to cover this huge gap where I'm pretty sure not many people will be interested in buying. I mean, will you be interested in buying here after price did this, um, failed to create an uptrend, failed to create the reasonable tradable structure? No, you wouldn't. I mean, it's just common sense. In many aspects, it's just common sense. It's not that you have to trade based upon what would Jesus do sort of a strategy, but what would my counterpart do right here? Um, I see support and support holding. Well, maybe my counterpart wants to play some limits and absorb, so I will play the long. is my counterpart gonna be buying right here? Maybe, maybe. And I think that there was a huge week. So some people actually, in fact, was able to feel this, but it didn't end up pretty well because the chances, the probability of this trade actually reversing and moving higher at this stage were low as hell. I mean, so that's what I mean many times when try to think in probabilities, not so much in um uh, uh, how can I say this? Just think on the probabilities of the trade working when you're taking them, not as much uh, on those objective measures that you had before entering the trade. I do that all the time. I tend to cut trades that are not really uh, working the way I wanted because the probability is simply slower. I assess the probability winning to be lower, so maybe it's a good idea to just move on the trade. This is the same case, but um, okay. So we saw a few examples of how to set up the pivot system. I have to go in a moment. So we'll leave it there. And when I do the next stream, we're going to use the same concepts that we saw today, but apply to BTC and how we can scale BTC with that. That will be my idea. Um, well, okay, I hope you like it. This was maybe a bit messy for the first stream I ever did in my life. I did a few before, but I think this is the only one that I was able to do stream well without any technical issues, I hope. So we'll leave it at that. And next session, that is going to be on Monday, we're going to do market review on BTC, and we're going to mark our levels as well. And we're going to try to look for scalps. This is a bit more complex because we will going to be using order flow. But I think it's something that will benefit anyone that wants to learn. Um, okay, that will be it, and thank you all for coming. You like it, and see you later.